What's going on, guys? It's Kyle. Welcome to the Stocko YouTube channel. In today's video, we're going to be covering a lot of different topics that, in summary, should help you out overall with the market for the next couple of months. So we're going to be covering, the 10-year yield, Spac stocks, why the market says it's at all-time highs every day, options. So I'm going to be going over a lot of different things that I look at daily inside of the stock market, and we'll just be covering a wide variety of topics that should help you. I'll go over some companies to avoid, some companies that I'm buying. So let's just get into it. And if you find any of this information useful, be sure to subscribe to the channel. I'll be keeping you updated daily with all the growth stocks, spec plays. There's gonna be a lot of great information coming out. You don't want to miss it. Let's get into the video. So guys, I know you're reading on TV, reading a lot of headlines, stock market at all-time highs. Stock market is surging, stock market is on the verge of a crash, and you're probably thinking like, why is my portfolio red every day? Why are all the companies that I have red? My portfolio is not green. What percentage of the market is going green right now? So guys, right now what's happening is a lot of different things. So what I'm noticing is the 10-year yield is going down, and there is tech stocks that are coming back to life, growth stocks, tech stocks, while cyclicals are still performing very well. Like the banks have had a big run, the airlines, the cruise lines, etc. But if you see the NASDAQ and the Dow Jones up 1%, it's not a lot of gains and stuff like that, like you're thinking. It's what companies are heavy weighted inside of those indexes that are making it seem like the stock market is just exploding right now. And it's actually not. It's just the big caps are what it looks like, hedge funds and fund managers are in right now. So you might be in some really good companies right now. They just might be in early stages that they just don't have the attraction, the volume, the headlines to move in it. So it's not a bad thing to be holding on to them. It just might take a little bit of time to, recoup some gains, that are, got wiped out and stuff like that. So I like to look at bar charts just to see what's going on at the market. And pretty much you're just going to go to stocks right here, and you want to go to volume leaders. This is what I look at every single day. This is going to give you small cap, medium cap, large cap. Right here, these are where all the caps are. But right now, this is all U.S. exchanges. So this is every company's performance right now today. And we can see, the companies that had the highest volume in the world: Bank of America, Neo, Apple. But we want to see what stocks are really moving, okay? We want to see what's making money right now. So you're going to go to percentage change. And as you can see, guys, there was only 6, 7 stocks in the entire market today that was over 10%. Okay, and if you really go into like what type of company that was, if it was like a large cap, I'm guaranteeing that those companies were small cap companies. So as soon as you go to large cap, you can see, guys, we had uh, 8 companies, 9 companies were over 5% today. So these are the ones that are really moving. And then we got Dell, Roblox, AMD, and Nvidia. So these are really the only companies today inside of the market, all-time highs, stock market exploding. So this is what you really want to look at. And if you go, to the CNBC and really look at like the NASDAQ, for example, it's because, the NASDAQ is tech heavy. And if you got a lot of new SPAC stocks, tech stocks that are, new up and coming companies that are not moving, it's because they're, usually not in a NASDAQ. And this is what the big money's buying right now. So you go to percentage change, and like I said, AMD, DocuSign, I mean, that's pretty much all the big winners today, that were really moving. I mean, everything else was, 1 or 2%, But when you got like Apple moving 2%, that's what's getting, NASDAQ exploding. And you go to the Dow Jones, look at the change. We had 3 companies over 2%. Salesforce and United Health. I mean, that's pretty much it, guys. So if you're wondering why these are moving up every day, it's because Apple and Microsoft have recovered, 10, 15%. So these are the ones that are, really moving. And then, these might not be very exciting to you because these companies have been around so long, and, these companies went stagnant. Like Apple went stagnant for like 6 months. So just want you guys to understand, if you're not in these massive mega cap companies like Apple, Microsoft, AMD, Nvidia, your portfolio most likely is not going to be moving right now. Okay, that's just the truth. Okay, this is where the big money is putting their money right now. So if you're wondering why your stocks are going down right now, you might be heavy SPAC stocks. Okay, we've had 500 SPAC stocks go public. Okay, the sad truth is 98% of them should have not gone public. They're not going to be amazing companies. A lot of these companies are sitting at $10, don't have deals, going under $10 and stuff like that. So right now I'm very selective with my SPAC stocks. I'm talking like 5 SPAC stocks, absolute max. We all know that the EV SPAC stocks, 10 of them are under $8. Okay, that's the sad truth. Okay, why those are going down is because the big money is shorting these. They're selling off these because these are a while out, guys. These are 1 to 2 years from even selling vehicles. So right now, I'm avoiding EV. The only EV company I even trust right now, and it's selling off too, is NIO. So NIO is, might produce $7 billion in revenue this year. No companies are doing that. Half of these companies have $0 in revenue. So if you're wondering why these are selling off, it's because people aren't waiting. The retail investors are getting shaken out, and that's just a sad truth. So even with the 10-year going down right now, um, as you can see, tech is coming back to life. Microsoft, Apple, and you might just be in some high growth stocks, new SPAC stocks that are just coming to the market, and those are gonna sit because they don't have a lot of high volume and stuff like that. But the truth is, why I think the stock market is selling off right now is because the big money knows data, and the data is that retail investors are heavy in margin right now, and they're going to be able to get that data, guys. If you take a look at the uh, margin statistics, we go back to January 2020, 560 billion in margin. As you can see, it just keeps coming up. 500, 600, 700. January 2021, 798. Now we're at 800, and it just hit a level of close to $1 trillion in margin debt. And they know if they can shake these stocks down 5, 10, 20, 30%, people are going to be selling off heavy, getting margin calls. That's why you see today inside of the stock market, it's just computer selling, it looks like, guys. Companies, everything was dropping today. I mean, if we go back to bar charts, so you always want to go on a bar chart and take a look at the percentage, and you want to see the big losses that are happening. And guys, these companies right now, these ones just look a long time out from anything happening, and it looks like all the weak hands are getting shaken out. Virgin Galactic, they're not even in space yet. QuantumScape, no revenue for 3 years. Plug Power, been around forever, no significant revenue. Uh, GameStop, already 25x. A lot of companies, right here are just getting absolutely battered in the short term, and these were down way more. And these were down even more significant in the day, guys. We had companies down over 15, 17%. So you just want to make sure you're in, the companies that are going to be having a lot of upside potential very soon with big revenue. If you're picking a SPAC stock, you want to make sure it has really big revenue. And I'm telling you, all this selling off right now is because of these margin statistics, guys. I mean, these are the highest margins in all time, guys. I mean, almost $1 trillion in margin debt, and it's just ridiculous how many companies that have just sold off 60 to 80% right now. And I would recommend to stay absolute max 30% options, guys. To be honest, I've been taking a big hit on options, but thankfully, I have 70% of my investment in stocks, and the stocks going down, I do not care at all. I know why I bought these companies. It does not bother me that the companies are going down. All you got to do is hold, and the companies will recover if they are quality companies. But right now, if you're investing in SPAC stocks, I would really avoid any SPAC stock that has gone under $9, guys. There's over 20 to 30, 40 of them that have gone under $9. That's a really bad sign that a company is dropping that low, has no strength at all. There's a reason that it has no strength at all. And guys, YouTube could be, to blame. We have some massive YouTubers out there talking about companies that, are running up from $1, a penny stock to over $20, and they're continuously pumping it with the company having no significant revenue increases and stuff like that. And this looks like this has been heavily focused on EV, energy, and just penny stocks in general. And we might have just ran these up on YouTube way too fast, and you don't have the types of investors in your company that you want, with diamond hands, long-term investors. And that's why you're seeing stocks sell off 10 to 15% because you don't have the best quality investors in them. So right now what I'm doing is I'm only going after, SPAC stocks with significant revenue coming in immediately right now, companies that like I've done videos on. PaySafe, I really think that one is going to take off in the next couple of months. They have earnings coming out. Also, SOFI, I'm going to be doing a video on them, but the IPOE merger, it looks like to be one of the best fintech companies out there. They have nearly $1 billion in revenue coming as well. So you get you get what I'm talking about. PaySafe, 1.5 billion in revenue. It's going to be tough for shorts to kill that one. SoFi, $1 billion in revenue. It's going to be tough to kill that one to the ground. Also, Neo, I just think it didn't have the best quality investors from 2020. That's a lot of the people selling out. 7 billion in revenue, that's some big money. Tesla is only doing 35 billion last year, so this company is not that far behind. And there's other companies that I'm going to be talking about, but you just want to go after the big revenue right now. That's the most important thing, especially on a SPAC stocks. So I put out a list, companies to avoid right now that I just feel like have been hyped up way too much from the YouTube community. These companies have just got overhyped, overpriced, overvalued very quick. QuantumScape, Fuel Cell, Plug, Gevo, Virgin Galactic, Clover, UWM, XL Fleet, Multiplan, Hyliion, Sense, IDEX, Zomedica, Romeo Power, Lordstown, SNDL. These are companies that have just had hundreds and hundreds and hundreds of YouTube videos, and I just don't think they have the backing if you want the company to move right now off fundamentals. So I'm not saying that they're not going to be great companies in a year, 2 years, or a couple of months. I just think right now there's not a high significant chance that these are going to be getting massive amounts of PR, big analyst covering and stuff like that. I just think the YouTube community is the only one's going to be bringing these back to life, and you're not going to get the best quality investors with just YouTube viewers. They're not, I feel like these people don't have the diamond hands on these companies because they want them to move so fast, and that's the problem. And that seems to be the problem we have nowadays. People don't have any patience, and that's why the big money, Wall Street is just capitalizing on these margin statistics right now. Anyone loading up on these with margins, these are going to keep dropping further and further, in my opinion. They don't have a lot of backing right now to verify that the market caps and stuff like that. So as you can see, you keep seeing these headlines: stock market at all-time highs. You know what companies are moving? It's mega caps. AMD, Nvidia, Microsoft, Apple, these are the ones that are moving right now. Cyclicals had big performances, but I think we might see a rotation back into heavy tech. And 98% of these SPAC stocks, guys, are not going to perform well. That's just the sad truth. So you got to make sure you're in the top 2%. So I just wanted to go over a couple little things. If you want me to do a video on a specific stock, please comment that stock. I'll do a video on it. If you have a company right now, why you're holding it, one of the ones I mentioned, give me a little sentence of why you're holding it, why you truly believe in the company, and stuff like that, why you bought it. I'd love to comment back to a couple of people, but right now I'm definitely buying up PaySafe. I'm definitely buying Neo. I'm definitely buying SoFi. I mean, these companies have massive revenue, and I do not believe the shorts will be able to stop these companies the entire 2021. So I'm taking a hit on some options in the short term. It's completely fine. I put all the money I'm willing to risk in options, which is 30%. So even if all the options fail this year, I'll just hold off on the stock that I believe in, and I'll bounce back maybe 2022. That's just the way the game goes, guys. Sometimes, it can be a long, dirty road, and you can see we've been selling off for about 58 days since the 19th, or 56, 57 days. So it's almost been 2 months. This could last another 2 months, guys. There's no telling, but you really want to be careful with the new and upcoming companies that you're entering right now, because a lot of them are going to have a long time before they gain that media coverage, that institutional investors heavily buying into them, big PR on Motley Fool, Seeking Alpha, and stuff like that. So you got to be very cautious. So, number one, make sure your company has significant, big revenue coming in. SPAC stocks, avoid everything that's going under $9 right now. It could be a long road to bounce back. Stay careful on the margin. Keep your options at 30% max. And, we're going to get through this. It might take some time. Just, you got to be patient and make sure you're buying the right companies. You can avoid all the super high growth and just go with the mega caps that are starting to heat up. If you want to, have a slow and smooth portfolio, Apple, Microsoft, AMD, Nvidia, these are doing good. Lamb Research, these companies are doing pretty solid and they might have a really good year. DocuSign, Square, Peloton, Fastly, these are not bad companies. So it just depends if you want to go with the companies that have been running for 2 to 5, 10 years, or do you want to get on that super high growth, hold through the pain, potentially have a nice bounce back in 2021. So I just wanted to go over a couple of things with you. I know this video was all over the place, but I really think, the big money. So I really do think the big money whales, on Wall Street, they got the data. They know what companies we're invested in that don't have the strength of, institutional investors, and they're capitalizing on these margin statistics that are at massive highs, guys. So this has to come down before, the selling stops. And I just wanted to cover all this with you. So be sure to leave me a comment and I'll be happy to comment back. If you feel any of this information was useful, be sure to subscribe to the channel and I'll be keeping you updated daily. I really appreciate the support. This is the Stock Goat. I'm Kyle. You have a great day.